The stock market is rigged, but if you traded 10 contracts of these 3 bouncing bull bombs, investment $2,076, and at the end of the session, you returned $5,044, 190% buying and holding. Absolutely incredible. We're going to get into it, but first, got to shout out all the new members here at Rigged AI. Will, C2 Trade, Bok Choi, Houseman, Van Profit, and Tony. Welcome to Rigged. Thank you for taking the rigged pill. Now, let's look at this session. We opened super high volume, 141%. Typically, this means we're going to have a trend day, which means 3+ strikes in any direction. But volume just falls off, and we don't get that. Let's look at the open. Bulls, bears, we move down 1 strike, and then we almost get to 2 before bouncing up. So the one thing to kind of keep in mind, pre-market change. This is how much the price has changed since the previous close. So we opened 5 strikes lower. That's low, people. That is low. If you bought puts, held them overnight, you were rich this morning. So when that happens, very rare, first of all. This is probably the second time, maybe third time in rigged history that we've seen an open this low on QQQ. So we don't really know exactly how to trade it, but the one thing in our heads is like, we're low. How much lower are we really going to go? What even happened? Nothing, obviously. So if you've watched the open session video with strategy, there are really 2 things you can do here. One, you can chase the first move. Whatever direction we go in the beginning, chase it. And obviously this one's down. We go to candlestick mode. 1, 2, 3, 4, 5 minutes, and you're getting over $1, $1.30. That's beautiful if you wanted to chase it, which means, hey, you're either taking this bear alert here, or as soon as we start to go, you're taking this one here. That's okay. Personally prefer to trade the swing, the reversal. And we typically see a reversal during the open. Basically what we did today for our best trade of the day, absolutely terrible one later, which we'll get into, is when this comes in, a strike below, we can keep the bull bias, right? Until we get an alert from the opposite side. At this time of day, 9:58, volume's 144%. So what we're thinking, right, is we're probably going to go 3 strikes in any direction, and we want to follow the alerts, follow the tags, because typically in high volume, tons of alerts, perfect tags. So here, you could have taken this, you get up a little bit, this is confirmation, okay, you're going to hold on. As soon as it starts coming down, peace, get out of it. But the important thing is like, hey, down here, if we don't nuke below to this 438 strike, we can keep that bull bias, right? And we can even pick up this one right here. And what we did this morning was we actually bought the 440 call. And the reason we did that instead of buying the 439 down here is because if you go on our website and you click on the daily stats tab, and then you look when the pre-market change is like -4, -5, every single session, we touch the blue line again. So that was kind of our thought process there, and we exited the trade right about here because it looked like it was going to 440 and it didn't. Come back down, right? This is beautiful. You get a bull bomb right at the 439 strike. You buy this thing right here, Okay, it chops a little bit, goes up, you get 440, and you never really draw down on it. That is a perfect alert. And if you held this thing until the end of the session, let's scroll down and find it. 1158. I mean, you're getting 162% buying and holding. Max drawdown was 6% in 20 minutes. So after 20 minutes, you were never in the red the entire session. Beautiful. So after we move up, we return to the blue line, opening price of the day, and we just chop 1,300 all the way until about 1503. We move up, come back down, and then go back up. The approach when this happens, we're looking at it right here. When we're just chopping at one strike, we want to chase whatever direction this thing breaks out, right? So here, okay, we actually made the mistake of trading puts. Not sure why, especially when you look at rigged. What does it say? Caution. Difficult trade. Prices moving up. This alert fires. Do not take it. Wait for the second red candle or stalling at the strike. Well, it is kind of stalling at the strike, but it was terrible. You're looking at the alert 1 minute before. Trade it. Clean entry, slightly out of the money. You know, it's tagging the 440 call option. Spot 13 cents out of the money. Max gain 262%. You're getting 168.59% buying and holding until the end, 1 hour and 15 minutes. Beautiful. Made the mistake. We blame JP. JP is now in charge of making sure that we follow the system that we created. If he doesn't do it, we're kicking him out. Maybe he watches this, maybe he doesn't. So the other thing to notice here, PS 0.77. That's neutral. That is neutral. 2.64. I mean, you still get 89% in an hour, but there's a big drawdown as well. What we need to be thinking, right, when this one comes in, you're late, right? Because that's what PS tells you. It's 264. It just went from 0.68. You're late. That's why the alert comes in, come back to the app, get out of trading view, whatever else it is that you're looking at. You can see like, hey, I'm late here. Let's see what happens. Let's see what happens, right? You get a nuke below the blue line, and then after that, it's just the rippy into the close. I mean, you're going from 1520 just below 440, and then we're going above 441 and closing essentially right at the strike, 441 and 1 cent. So recap, looking at a session like this, early, you know, we're in full send mode. We're expecting to follow alerts and get awesome price action and just like print money the entire time. Doesn't happen. But that's okay, right? Because if we're taking this, okay, we stomp out. We can keep this bias until another alert comes in. You get the move, okay, it goes close to 440. You're getting out of that trade there. Hey, another bull comes in at 439, and this thing has a 6% drawdown in 20 minutes. That is a perfect trade. And like the hardest thing for most people to do is see this appear right here at the strike, look at TradingView or whatever else. You're like, oh my gosh, it's going to keep going down. But it's like the whole point of rigged is that Wall Street knows, right? Wall Street knows. Like they knew it would go up here. That's why the alert is here. $250 million in bullish flow. And it's perfect. And even when we get to this point here, you know, it's 2 bulls, 1 bear. You really just want to follow it whatever way it breaks. Because at the blue, right? It's 50-50, could go either way. I mean, you get it initially, and then right here, just chase it. Just chase it all the way up. Get your 100% plus 200% if you bought it right here. Incredible stuff. Weird that, tradability dropped. But this type of end of day Hulk move or nuke into the close is very common and very typical, especially when we've been flatlining. Ping pong, bing bong, right here. Whatever way it breaks, chase it. They killed people on this first break. Robinhood closes right here, and then they ripped it up. 441. Bing, bang, boom. Just like Bluey likes to say. Well, I think that's Peppa Pig. We've got more videos coming out. Remember, you can see all of this on our website. Click the link below. Check out the alerts. Use the profit stimulator. Let's see max gain. It's the same thing. Max gain and DHR. When these things are like the same alerts, that means it was an easy trading session. You should have made money. And if you didn't make money, probably not using rigged, or you bought this bear with us as YOLO at the end and held it for way too long. Stupid. Thank you all. Keep it frosty. We'll see you in the next video.